Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this Tuesday, February 10th, 2026. We've got a packed day with mixed signals across the board, some intriguing moves in major indexes, and plenty of chatter about the economy and corporate earnings. So let's dive right into the highlights and see what's shaping the landscape for us long-term investors, while also keeping an eye on those short-term swings. First up, let's talk about how the major indexes performed today. It was a bit of a split decision on Wall Street. The Dow Jones Industrial Average managed to notch another record close, marking its third straight day at an all-time high. Meanwhile, the S&P 500 and Nasdaq took a breather, slipping slightly as tech stocks faced some pressure ahead of key economic data releases. This kind of divergence often signals rotation, money moving out of high-flying sectors into more stable, value-driven areas. For us long-term folks, it's a reminder to stay diversified and not get too caught up in daily fluctuations. Now let's check out some of the big winners among large-cap stocks. Shopify and Spotify were standout performers, posting impressive gains as investors bet on their growth potential in e-commerce and digital media. Marriott International also caught a nice updraft, likely tied to optimism around travel recovery. These kinds of moves can be tempting to chase, but as long-term investors, we're more interested in whether these companies can sustain growth over years, not just days. Still, it's worth keeping an eye on these names for potential entry points on pullbacks. On the flip side, we saw some notable declines in the large-cap space. Intel took a significant hit, reflecting ongoing challenges in the chip sector, while S&P Global dropped sharply after mixed quarterly results. Western Digital and Seagate also faced selling pressure, possibly tied to broader tech rotation. For us, these dips could spell opportunity if the fundamentals remain strong. Think of it as a chance to buy quality at a discount, but only after thorough research. Looking at the market movers, the usual heavyweights like Nvidia, Amazon, and Tesla were among the most active stocks today. Tesla managed a small gain, showing some resilience despite broader tech weakness, while Nvidia and Amazon saw minor pullbacks. These names often drive market sentiment, and their activity reflects ongoing investor focus on AI and consumer trends. As long-term players, we care more about their strategic direction than daily price wiggles, but short-term volatility can offer tactical entry or exit points. Speaking of activity, the most traded stocks today included familiar faces like Nvidia and Tesla, alongside Intel, which saw heavy volume likely due to its price drop. Ford also popped up on the list, possibly tied to its recent earnings report and tariff-related news. High volume often means heightened emotion in the market, so for us, it's a signal to stay calm and stick to our long-term thesis rather than react to the noise. Shifting gears to broader economic news, there's a lot of buzz around Federal Reserve policy and interest rates. Some Fed officials are signaling patience on rate cuts, suggesting monetary policy might stay steady for now, which could keep pressure on growth stocks in the near term. Meanwhile, President Trump's comments on tariffs and Fed oversight are stirring debate, adding a layer of political uncertainty to market dynamics. For long-term investors, this underscores the importance of focusing on companies with strong balance sheets that can weather policy shifts. Let's talk earnings, as it's a busy week with plenty of big names reporting. Companies like Coca-Cola, Gilead Sciences, and Marriott International are on the docket, and early results are showing a mixed bag. Coca-Cola beat earnings expectations slightly but fell short on revenue, while Lyft disappointed with weaker-than-expected rider numbers, sending its stock down after hours. Mattel also took a hit after missing holiday sales forecasts, a reminder of how consumer spending trends can impact results. For us, earnings season is a goldmine of data to assess whether our portfolio holdings are executing on their long-term strategies, even if short-term misses create noise. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports. Zooming out to the past week, some large-cap stocks have posted incredible gains. AppLovin led the pack with a massive surge, followed by ASE Technology and ARM Holdings, both riding the AI and semiconductor wave. These weekly movers highlight where momentum is building and for long-term investors, they can signal sectors worth researching further, especially if you believe in the secular growth of tech and AI. On the other hand, the past week wasn't kind to everyone. Stellantis saw a steep drop, alongside Medpace Holdings and Becton Dickinson, reflecting sector-specific challenges or earnings disappointments. These declines can be painful in the short term, but for us, they're a chance to reassess whether the underlying business remains a solid bet for the next decade. Wrapping up with sector performance over the past week, industrials led the charge with a solid gain, followed by communication services and real estate. These moves suggest investors are rotating into more defensive or cyclical areas, possibly hedging against tech volatility. For long-term portfolios, sector trends like these help us gauge where to overweight or rebalance based on economic cycles. Conversely, energy and financial services lagged behind this week, with energy taking the biggest hit. Consumer defensive also saw weakness, likely tied to disappointing retail sales data. While short-term sector underperformance can sting, as long-term investors, we look at these dips as potential buying opportunities in undervalued areas with strong fundamentals. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stay engaged with MarketSnap for more daily summaries and in-depth SWOT analyses to keep your long-term investment strategy sharp. See you tomorrow for the next update.